while the overall market's tone seems to be euphoric, the U.S. government is hardening their crypto tax rules. What does that really mean? Welcome back, everyone. Looks like people thought that that Matrix port report wasn't the cause of the dip. Some people are also saying it was Jim Cramer. Anyways, Jim Cramer's comments, which of course seem to be a counter indicator. But look, while all of this euphoria is going on, right? We've got some new laws that are coming in place, and there seems to be a lot of gray area. And of course, right, there's no clarity. What a surprise. Anyways, guys, before we get into it, please, if you haven't already, like and subscribe. The only thing that I ask really when we do this show is that you subscribe if you like the content. I really do appreciate it. Anyways, let's dive into this story. New cryptocurrency tax rules in the US started to be implemented quietly. What's changing? The US Internal Revenue Service has begun implementing aspects of President Joe Biden's Infrastructure Investment and Jobs Act of 2021. Including a requirement that all cryptocurrency transactions exceeding $10,000 be reported to the tax authority, which is kind of, and I know that people seem to think that this is something new, but this type of regulation already exists within the travel rules, right? Like you can't cross, like I can't go from Canada into the US with $10,000 without claiming it. So there's already how could I say this? There's already a precedent, right, around that figure, right, and around the government obviously doing this stuff. Now, one thing I want to point out before I continue, I think is hilarious. I always find that these the titles that they give these acts have absolutely nothing to do with what they're talking about. Like, what does taxing a whole bunch of people's crypto transactions have anything to do with infrastructure, investment, or jobs? I mean, yeah, I guess you can say the argument, well, they're going to hire more IRS agents. Like, yeah, okay, fine. But I'm pretty sure most people don't want that job. Anyways, I'm just saying these titles are bullshit. They're meant to fill you with a sense of hope. They're meant to make you feel the warm and fuzzies, like good things are happening. Okay, this is it. I mean, it's really sad, and this is not a commentary on Joe Biden or anything like that. I am just simply saying all of these politicians, I'm going to just stick them all into the same thing. They're all snake oil salesmen. Okay, that's all that is. Okay, so they put these puffy little titles to make you think that wonderful things are happening, but really it's just increasing your slavery, or how could I say this? Just kind of positioning us for an easier transition into the type of digital slavery that they want to offer us, that they want us to simply take on. Anyways, all right, let's continue. The bill passed by both houses of Congress and signed by President Biden introduced the 6050I rule. This rule requires brokers to report all transactions received from crypto exchanges and custody providers that meet or exceed the $10,000 threshold. And of course, you're thinking, does this apply to me? The rule was introduced as part of an attempt to prevent money laundering, of course, right? Such bullshit. I'm sorry. Because you can't launder money. You can't do that with a number like 10,000. I mean, I know you guys aren't going to believe this, okay? But essentially, mathematicians and economists from all over the world came together and they decided on this number because this specific number stops money laundering in its tracks. So right now, there is no money laundering in the world. So just don't pay attention to HSBC. Don't pay attention to Chartered Bank. Don't pay attention to the multiple other banks throughout history that have been busted for money laundering and tax evasion. Just don't pay attention to that, okay? Because it's not real. The new reporting requirement, originally planned to go in effect in January 2023, only applies to businesses using crypto assets and does not affect individuals. U.S. taxpayers have already been required to report all digital asset transactions since 2019. Yes, this is true. The majority of the questions that we have and that we are seeing, right, is who does this apply to, and am I actually affected by this? So, good article here out of Blockworks. And we're going to dive into it right now. Who's affected by the new crypto tax reporting obligations in the US? Business and professional traders, right? Businesses and professional traders that receive over $10,000 worth of cryptocurrencies will need to report their transactions to the IRS. Those who fail to comply may be guilty of felony offenses. There has been little guidance and clarification from the IRS around who is actually subject to reporting obligations, and I believe that is done by design. Because they want to cast a wide net, and they want us, in my eyes, essentially the IRS is looking for people to self-incriminate. That's really what they're looking for. But I can easily be wrong, and I have no problem with learning more accurate information, but that's just what I believe they're doing. Anyways, this has raised concerns among traders, both amateurs and professionals, using decentralized finance protocols, which do not have a physical address, social security number, over whether the law applies to them. And even though I'm not the biggest fan of Will Clemente, I do think that he makes an excellent point here. I was unable to get the address and social security number of Uniswap, which I swapped my ETH to ERC20 token through, nor the protocol which gave me rewards for staking the token after. That's right. You may be doing an exchange with not necessarily a specific entity. It may just be a protocol. What happens then? Shehan Chandraskara, the head of tax strategy at CoinTracker, told Blockworks that 6050I applies to persons, could be individuals or businesses who are in a trade or business. In simple terms, they need to run some type of activity in a business manner. Chandraskara said, if you are a simple crypto investor, the majority of crypto users in the US, you don't have a trade or business. Therefore, you have no impact from 6050I. In order to determine whether the DAO contributor falls under a trade or business, some questions to consider could include: is contributing to the DAO your full-time self-employed job? Is your main source of income? Do you do this full-time throughout the year? If the answer is yes to all of these above, there could be other qualitative questions depending on the situation. You run a trade or business and could be subject to 6050I, Chandraska said. If it is a person's full-time occupation to farm airdrops, they are likely to be subject to reporting obligations, though a person who receives a one-off airdrop allocation is likely not subject to reporting obligations. Transjaskara explains that stakers on major exchanges who receive rewards but have a separate main source of income would likely not be required to report to the IRS. On the other hand, a person or organization that runs a professional staking pool and earns commissioned income will be subject to reporting requirements. There has not been clarification from the IRS, what a surprise, on what is considered trade or business activity and what is not. Of course there hasn't. That is done on purpose, in my opinion. This is a subjective standard that has connections to so many other sections of the IRS code, and therein lies the reason for the ambiguity. Some court cases have clarified this for facts related to the case, but there's no bright line rule. Chandraska said, this ambiguity has led crypto think tank Coin Center to take matters into their own hands. Already in June 2022, Coin Center filed a court challenge against the U.S. Treasury Department, arguing the IRS provisions are unconstitutional. The really tricky nature of this requirement will become clear when someone makes such a donation but does so anonymously by simply sending us Bitcoin or Ether to our public addresses. Who could we possibly list as the sender in that case? So again, I do believe that it points to the narrative that the ambiguity is done on purpose in order to cast the wide net so that people can self-incriminate, number one, but number two, the IRS has essentially reasonable doubt, and they can essentially pursue whichever individuals or businesses they feel falls under this net that they've cast. Anyways, yeah. So look, do I think this is good? Do I think this is bad? I mean, obviously taxes, taxes are just an absolute scam. So obviously I don't think it's that good. The other side of the coin, right, could be that, hey, we need this type of regulation to come from the legacy system in order for the legacy side of the system to start moving forward, because essentially what some of us see building out, right, are parallel economies. And I believe that this tax code, this is going to do is incentivize more players into a circular Bitcoin economy. So I really think that the lawmakers are fighting a losing battle. I believe that they know it. But really what needs to happen is that self-reporting, and people need to be, I mean, sadly, right? Like, how do you get people to self-incriminate and self-report? You put penalties on them. If they don't, you scare them into jail time. There's any way there's many numbers of ways that this can happen, because the state, right, has a monopoly on the violence. Definitely, like, this is part of a growing ecosystem, that this is just what's happening as adoption takes place. Guys, pay attention. Don't try to be a hero. Look, it's not financial advice, okay? But I can say this: if you are not reporting in the US, okay, in the US specifically, if you are not reporting that you are selling Bitcoin and that is going into your account, if you think for a second, right, and I know that's not the same thing as this crypto tax rule, but it's a general statement. If you think for a second that somehow you're not going to get caught, at some point you will, and it doesn't matter whether they're right or you're right, or it doesn't matter. It's the state. Okay? So they are going to take what they believe is theirs from you. So yeah. Anyways, guys, let me know what you think. Are you worried about this tax rule? Are you concerned about it? Is it a giant nothing burger for you? Let me know what you think. Put it in the comments. And guys, this wraps up our clip for today. We will catch you next week. And of course, guys, this month's clips, as I've been telling you, have been brought to you by Full Throttle Hodl, fellow Bitcoiner and pleb, reminding everyone, go fuck yourself, stay sovereign, and I'll catch you all next week.